Welcome to the Corporate Treasury 101 podcast. This is the second part of our interview with Stefan M. Ciesla, co-founder at Ayora, and Gordon McKenzie, CTO and co-founder at Ayora, indulging in discussions related to Ayora, how it functions, and how it is different from other existing solutions. Stefan brings his expertise from his previous roles at FIG Corporate Finance and as Chief of Staff at Bankable, while Gordon McKenzie has a background as a clinical entrepreneur and at NHS England. Together, they bring a very interesting blend of knowledge around capital management and technology. Our conversation with them was truly captivating, and we are excited to share it with you. In the episode of today, expect to learn what does Ayora do, what is the solution that they bring to life, how is it different from existing solutions, how does it work technically, how do they connect to ERPs, TMS, and payment hubs of different companies, what is the predictive model that they use, and much, much more. If you enjoyed this episode, please consider leaving us a review on your favorite podcast app. Your support means the world to us and helps the podcast thrive, and of course, help other people discover the podcast and learn more about corporate treasury. Last but not least, we started the AI Treasury Insight newsletter, a bi-weekly 3 to 5 minutes read that covers what is happening in AI in Treasury and how this technology will change the way we do corporate treasury. Follow the link in the description or simply type in your browser corporate-treasury-101.com/newsletter. With all that being said, please welcome Stefan and Gordon.
Bring us on to yourselves, please. Tell us about Ayora as a company. What do you guys, we talked a lot about working capital management today. Touched on automation and AI even. What do you guys do at Ayora in all of this?
Yeah, thanks for asking. The way we like to describe ourselves is we're building a new and intelligent toolkit to help CFOs and treasurers to manage their balance sheets even better than they do now. And I think, it's a bit of a mouthful, but really what we're trying to convey is that we're building a platform that seeks to understand the company's balance sheet profile and then is able to kind of provide like contextualized feedback back to users to essentially help them improve their cash operations. And this includes both, the liquidity side of this equation, so the cash that you already have on hand, but also working capital side, which is the cash that's kind of in the pipeline, if you like. And we kind of started off with building a liquidity platform. That platform helps companies make the most of the cash they already have. And now we're looking to kind of broaden that to also support cash conversion. But ultimately, it just comes back to kind of helping people gain this much more contextualized visibility as to what's happening with their cash flow.
Okay, so super clear, Stefan. Thanks a lot for this. How can you walk us through how it is actually different from the existing solutions, and maybe linking back to what we said earlier, right? What is out there today helping corporate treasurers and CFOs already? How do you guys at Ayora make something that will help them in a different way and normally in a better way?
Yeah, no, absolutely. So I think there are a couple of important differences between how we approach this and many others. So firstly, we are really kind of pretty relentlessly focused on making everything we do actionable. What we find is that there are many solutions that are actually really good at sort of summarizing and displaying like large data sets and helping people kind of get almost like a bird's eye view of the situation. And we want to take it a step further. So, we actually want to build tools that help people to actually just infer the best course of action based on the data that our platform sees. So it becomes less of a reporting tool and more of almost like a quasi programmatic advisory tool that helps you manage your finances kind of on the fly. And this comes back to the point that you made earlier, which is that a lot of these processes kind of happen like minute by minute, day by day. People often look at it from a kind of point in time perspective, which makes perfect sense. But at the same time, we think that today, you can do even more. And you don't have to keep looking at something to make sure that you maximize every opportunity to create value. And secondly, the kind of distinction that we see between ourselves and many other solutions is that we are kind of big fans of, let's say, embedded finance as a theme. And when I say embedded finance, I just go back to things like embedding payment functionalities in apps. It's actually more about the idea of finding the user, in the environments in which they already reside. So to give you an example, in order to manage your balance sheet, do you always have to log back into an application like a TMS? Or, is it more appropriate that some of these functionalities are delivered to you somewhere else? And, people spend a lot of times in tools like email, Microsoft Teams, you name it. And frankly, we believe that a lot of this information that our platform can ingest and produce back and help interpret, doesn't necessarily need to live just in our application.
You touched a really interesting point here on the fact that treasury analysts and above are not only looking at reporting anymore, right? But this whole real-time visibility, real-time access doesn't need to be just for the sake of it, right? It's to allow better and strategic decision-making. So that's a really good point. How, going back to working capital management in particular, how will that help them, the Ayora solution? How will that help the treasury professionals directly in the management of their working cap?
Yeah, so I think you're right. It's the world is kind of getting more and more real time. If you like, the downside of that is that you suddenly have to make a lot of decisions very quickly because you see things changing all the time. Try to think of how that impacts people who work in these fields. They're frankly under ever increasing cognitive pressure. And we see this through conversations with people we have ourselves. There are actually quite interesting research pieces out there which try to kind of measure the impact of data availability on how people make decisions and, to what extent that kind of data overload might lead to actual adverse outcomes if it isn't being helped in a certain way. Because at the end of the day, the more you know, it doesn't mean that you always want to make a better decision. And there's probably a limit as to how much time not only you can devote to something, but also there's a limit as to how much time it makes sense to devote to a certain decision. Because, there's always a trade-off between your own time and other things that you might be looking at instead of that specific thing. So I think, in our case, being able to interpret vast amounts of data that keeps moving fast and fishing out patterns, which we can then present back to people in a digestible way and, suggest to them what kind of action might be necessary based on this new information is very helpful because it kind of turns the tables around and our system almost becomes proactive as opposed to being reactive, the way that many applications in the past have been designed. And then secondly, I think, and this is kind of related as well, is, in the past, a lot of, especially in the context of working capital, a lot of time was spent by decision makers on kind of interacting with these process teams on the ground. And that, to a large extent, this is good because it fosters collaboration. But at the same time, if the kind of intensity of these interactions can increase because there's more information, it's more readily accessible, can we help kind of provide a bit of a bridge between those two worlds and help essentially, make sure that the processes are managed in a way that ultimately maximizes value.
Super clear. We love diving into the details and the technical details of these kind of things. Could you take us through how your platform is able to, well, maybe this is a good way to put it. Could you start with the traditional way TMS or treasury working capital system is integrated and how your solution is integrated to enable the more, not only real-time access, but also the insights access? Is it cloud-based? Is it onboard? How does it work?
It's probably useful just to start with how these systems have evolved over time. So when treasury management systems first came about at any kind of significant stage, let's say 20 years ago, there had been very much kind of desktop systems that you had to install, a bit like all of the software around that time. You would have required a direct connection with a bank that you'd have to establish between you as a TMS company and the bank. And that would probably have not even used modern communication standards. What we're talking about there are things like REST, for example. That's representational state transfer, which is a modern way of communicating between systems. They would have probably been very clunky, using very old-fashioned, protocols. One example is like Edifact. Hardly anyone uses anymore, but there are still some legacy systems that use these really old-school ways of talking to each other. That's how it would have started. And over the years, some companies, some big TMS systems, like Ciesla, for example, they've built hundreds of these direct connections with different banks, which made them very powerful in the sense that they can directly connect to multiple banks in multiple jurisdictions. However, in, say 2018, this started to change, whereby open banking came along, and that's been rolling out ever since. Whereby it started to become unnecessary to create those direct connections. You could actually use a single gateway, and which all works around REST principles. So systems communicating in a modern way. And that enables companies like us to not have to come along and create 500 direct bank connections. We can then connect to many banks using open banking. There still may be a need for direct connections in certain jurisdictions that aren't well covered by open banking, or in certain corporate cases that haven't quite gotten to open banking yet. But it greatly reduces the entry point to connect to banks. So yeah, in summary, that's that we use open banking as our first method to connect, and then we can use direct bank connections because it's just all works around this REST principle, and that's well understood and quite easy to integrate now. And that's how we do it.
How many APIs have you had to make to enable that? Exactly. Or is it something that is quite straightforward to do? Because even if you are linked into your open banking systems, there's lots of different parts of open banking as well, right? It's not just like you log in and you're in this stream of data that's freely roaming around, right?
Yeah, that's right. It's a good question. So worth mentioning that when open banking came along, initially it was just a cleaner way of essentially banking systems to communicate. But what happened was companies started coming up that were essentially providing a single gateway to access the whole of open banking, or as much as possible. Players there are players like Plaid, Klarna Cosma. In the UK, there's Yapily, and many others. Tink, which was acquired by Visa. So what they do is to make it easy. You only have to talk to one API, essentially. So we use Plaid and Klarna Cosma. We use Klarna Cosma for access to UK, EU, single market. We use Plaid for access to the US open banking. So yeah, that's only two APIs that we need to use to actually get our open banking connectivity. So you can imagine that's a much better starting point than 500 direct bank connections. And so yeah, that's our kind of basis.
Could you break that down for us just a little bit more then, Gordon? So as a user of a platform like Ayora, right? If I'm sitting in a treasury department, you are connected to this open banking protocol, which is able to connect to all the external bank partners, other providers. Maybe there's some FX in there, maybe there's some hedging, et cetera, et cetera. How do you then connect to my internal processes, like my ERP, my TMS, if I already have one that's perhaps sitting parallel to yours or something like this? Do I log into a portal and then it's just connected, or how does that work?
Yeah, so ERP systems follow a similar setup. So a lot of modern ERP systems also use these REST principles, and therefore they have their own APIs. They sometimes have a whole suite of developer tools and developer documentation, even sandboxes to enable developers to integrate systems. And these developers could be internal developers at a given company, or they could be technology companies like us. And so what we can do is we can basically follow this documentation and use their tools. But it's worth just mentioning, people might hear this term, it's useful to know. We often call these SDKs software developer kits, which is basically just a way of easily connecting to a system which under the hood uses an API through REST. It just makes it even simpler for a developer to plug into this. So we use these SDKs if they're available, and essentially we can make a secure connection to some kind of system, ERP system, for example, whereby the company, if they want to connect their ERP system, all they have to do is provide a set of credentials, which is normally like a client ID and a client secret. And that allows them to do a secure handshake. And once that handshake is completed, they're then given a kind of key, if you like, a token that they can use. And that token will enable them to access the system and whatever data they've given permission for us to access. So that might be their ledger entries, for example. It might be transaction history within the ERP system, etc. So that's how we do it, basically. It's all using these principles of APIs under the hood.
And just to not scare off our treasury friends overall, this all happens automatically, right? Like your system is automatically talking to this other system. It's not the person needs to know what a token is and what a secure handshake is. And they have to remember another set of credentials, which is called a client ID, which is separate to their user. And this is all like automatically done when they first boot up the system, and that's it, right?
That's right. Actually, they probably have very little to do this, i.e. we would just liaise directly with their kind of system administrator. So most of the companies we deal with will have a kind of dedicated person who knows this well and is happy to do all this. So yeah, from the kind of treasurer and user point of view, they won't really see any of this. This will just be part of a brief onboarding process whereby we just can make these connections. And then from their perspective, we just want them to be able to see their data and be able to work with their data, be able to link their data. I link banking data with ERP system data, with an existing TMS system data, etc. So yeah, from that point of view, don't worry, there'd be really nothing for them to do. Our whole thing is to make it as simple as possible and to, if anything, make sure that complexity is like buried where it should be, and the end user can just do what it needs to do.
Is there like a prerequisite level of system that a potential company that wants to integrate your system needs to have? Because, I mean, with the number of treasurers, Kima and I have spoken to group treasurers, treasury assistant treasurers, etc. Off record and on record, there's some horror stories out there about like how archaic some systems really are, and the word Excel getting thrown around a little too loosely at times as well. Like, there's like a minimum, I guess, that their system needs to be pre-automated before you add value on top, right?
Well, actually, we kind of target companies that don't actually have a TMS already. If companies already have a significant TMS product, then that's really good. They're probably doing everything they need to be doing. Whereas we actually like to speak to companies that don't have an existing solution and therefore are still using Excel to manage their cash flow, the cash visibility, who are having trouble getting their ERP system data to marry up with their bank transaction data. That's exactly who we would like to speak to, because we can probably solve significant pain there. Essentially, this is quite a manual process in Excel, and can be very tedious and prone to error. And therefore, actually, the less automation you already have, the more we can probably help.
Super interesting. And so, but then tell me about the system that Stefan mentioned earlier around the insights that you're also doing. So you're not just doing the real-time connectivity, etc., that I guess any ERP or any TMS out there could probably start to provide. You guys are also like giving this sort of assistance tool, predictive, or I think the word that you used was insights, right? how does that work? What does that do exactly?
Yeah, that's right. So what we've just talked about, the connecting systems is kind of the starting point. Just to, you need that to, so it's like the minimum layer you need to start to give some value, and then we want to try and give more value by offering some what we like to call actual insights. So we could tell people that their balance is getting low, and that is a useful alert sometimes, but most of the time people kind of on top of this anyway. So what we like to tell people about is that part of our actual insights is opportunities for them to save money, opportunity for them to make more money from their money. And so that's what we're really looking for. So actual insights would be that we've noticed that there is excess liquidity parked in one of your accounts. Let's say you have 20 bank accounts and we've now got them all under one roof. We can see exactly where all the money is. Perhaps a few of those accounts are like trading accounts, and there's money coming in and out. And perhaps some of them are more kind of holding accounts whereby money's being essentially stored there. And what companies can end up with is a kind of significant pool of capital. And they might not always know it exactly because they won't have absolute crystal clear clarity over their cash visibility and their forecasting because they're not really sure where everything is, and they need to contact 5 different people and log into 20 different systems to work that out. So all of a sudden they may be in a situation whereby they can actually reinvest this excess liquidity into money market funds, which are offering very attractive rates right now. It may be that we can work out if there's opportunities to renegotiate with their suppliers in terms of payment terms. And it may be that we can identify that they have significant currency exposure, and therefore looking at hedging would be a good idea. So these are the kind of actual insights that we like to offer. And that comes from analysing the data once it's all been integrated, centralised. Yeah, that's the basis of what we do.
And that's an automated system. So, I mean, these are the kind of insights a treasurer would be looking at the data, hopefully, and pulling out, right? That you would have a treasury analyst looking at, eventually, you're like, hey, by the way, we could pull all of our cash into this fund instead of borrowing money in this region or in this legal entity that we have. We can just pull cash over from another one and then save cost of borrowing or something like this. But the idea is to really automate these insights. So it's kind of like, what's this tool that I think it's like these like editor tools. I don't know if anyone's ever used them, like Hemingway and stuff like this. Like you put in the text and then it kind of says, oh, you could do this better and this is a bit complicated, and just a bunch of things pop up and go, hey, you should replace this with a noun or whatever like this, right? It really like is able to analyze the same way a human does, or has access to more data.
Exactly, yeah. It's kind of a bit like we sometimes use the analogy of a co-pilot. I mean, as a software engineer, we have a lot of tools now that help us with this. For example, a popular one right now is GitHub Copilot, which is essentially, it plugs into your development environment, so the place where you're writing code, and you can kind of just talk to it a bit like ChatGPT, and it will kind of just automatically give you ideas or suggestions as to what your next line of code could be, and it really helps with productivity. It means that you're not having to like write out boilerplate that's actually very boring to do. And it kind of just does that for you. You can focus on the bits that matter and making sure it works. And that's kind of what we want to do, is to enable them to absolutely have oversight of all this and to have the final say of whether money is invested or hedging products are purchased or suppliers are renegotiated with. But bring this to the front of their mind. It's a behavioural thing as well. It's in a sense empowering them with the insights that they need to know at the right time so they can make the best decisions possible. And they're not just drowned with decision paralysis and drowned with data and manual tasks and moving things around on different spreadsheets and trying to get a hold of different pieces of data. That's what it's really about. It's really about enabling them to be kind of manage their treasury the best way they can.